Hi guys, Lee Gettess here with the Market Sense for the week of January 9th, 2018. We got through the holidays, let's see what the new year brings. All the charts in this presentation are provided to us by Trade Navigator software from Gettess. And we can see in the chart of the weekly bonds here that they've started to show a fair amount of weakness. This 152.02 area here has acted as resistance and driven them down. 150.27.28 in this area obviously meant nothing. And they're down, tickling the area here of this sideways pattern. This low here is 149.07 and this one's 49.06. So they're right down into that area, and they could poke it marginally and come back up, but they could also be heading back down to 46.19, I believe, is this swing low way back over here on the left side of the chart. And it's possible, with the Fed continuing to raise rates, that they're simply going to get hammered and go down a substantial amount. But for now, they got the two consecutive inside weeks here, meaning a directional move was likely to follow, but it's a breakout type thing. It's not predictive, the direction. And obviously we know now the direction is down. So the question is this more serious and going all the way down, or are they just trying the sideways pattern bottom here? And at this point, you have to assume that this is still support until it breaks. But if it breaks, next target's down in the mid 146 area. This could be a more serious sell-off. Stocks have almost the inverse situation, and I say almost for this reason. This last week looks really excessive, looks like a blow-off. Of course, this kind of looked like a blow-off, 5-6 weeks ago here, but this one more so because it closed right at the high. And that much extension up, that much above everything and closing right at the high often brings at least temporary exhaustion. The next target this week is up 27.65, and they're kind of acting like they can't make it that high, which kind of makes sense. Support to continue the trend up is down here around 27.13. It's a long ways just to get down there, so I'm not sure how important that is. But if you look at just the size of this move up, obviously they could be due from a retracement, and they could drop back below 2,700 to the middle moving average here. Heck, they could drop all the way back down below 2,600, and this would still look like an awfully bullish chart. The only thing we know for sure is that this much excess, this type of blow-off move here, they were probably going to at least stall here. So if they stall or go back down to some degree here, it's not the end of the world. It's just kind of anticipated. And the key will be, once they get down to any level of support here, how do they hold? What type of price action do they set up at that point? That's the only way we'll be able to judge if this will continue. But I think you have to give it the benefit of the doubt. They're going to find support at some point. The problem is it just could be a tremendous amount lower. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking.